Namaskaram everyone, welcome to Quick Trading. So today I'm going to show the power of hedging. Actually there is no strategy involved, so I want to show you how we can use the hedging. So many people know that we will use hedging to reduce the loss, to reduce the margin, but how many of you use the hedging to increase your profit? And also we can convert literally any strategy into no loss strategy if we know how to hedge and when to hedge. So if you already aware of these things, you can skip this video. This is for those people who want to change their strategy into no loss strategy, or who wants to increase their profit after getting some profit. Okay, so basically when you are in profit, don't exit, instead hedge with some other contract, 1 plus 1 minus plus 1 minus 1 plus 2 minus 2 based on your profit. If you hedge it, there are high chances that you will get more profit, or at least you will end up with no loss actually. So these I'll show you as an option buyer how we can do the hedging to get more profit, and as an option seller how you can do hedging so that you can create a no loss strategy out of it. Okay, so let us see as an option buyer how we can undo a hedging, and how you can convert based on your view. If your view is something like, if your view is for example bank nifty is falling, you bought a PE and you are thinking that it may fall more, but at the same time you don't want to risk your profit. Okay, at that time just see this for example. So let me show you with an example, maybe you can relate more on this. Okay, so let us jump. So you are an option buyer. Okay, so bank nifty is falling. Now you bought 39,000 PE. Okay, 39,000 PE, you bought it at current price is 100. Okay, you bought it around 200. Okay, let us see what is the current price of 39,000 PE. 39,000 PE, sorry. So the current price of 39,000 PE is 233. You bought it when it is at 100 rupees. So currently you are in 3,325 loss. Now you want to book the profit, but instead of booking the profit, if you do a hedge, so let us see what is the benefit we are getting if you do the hedge when you are in profit. Okay, so let us hedge. For example, your view is for bank nifty may fall more, but you don't want to risk this 2,500 since you are an option buyer. If bank nifty doesn't fall below 39,000 by the end of the expiry, you may end up in loss of 2,500. This is known thing. But instead what you are going to do, you are going to sell 38,700 put. Okay, one lot put I'm going to sell at 152 price. Okay, if you see here, so as you expected, if bank nifty fall more, you can expect more profit. At the same time, if bank nifty doesn't fall below 39,000, still you will get at least 1,300 1,400 profit based on the number of days to expiry. Okay, so this is especially benefit when you are in profit. So the same thing can be done if you buy call as well. So if you bought a call, if bank nifty is moving up, you end up in profit, but instead of hedge, instead of exit, try to hedge with some other contract. So similar way, instead of 38,700, if you think that so bank nifty doesn't fall 39,000, even though you bought a put, you got some profit, and then again you are thinking that it may not fall beyond this. So what you do, you just 39,100 or 200, sell it. See the payout graph how it is going to change. So I sell this. Now if you see, instead of 3,000 to 300, you are getting actually 5,200 profit if bank nifty doesn't fall below break even 39,000 something. Okay, so actually if it doesn't fall, you are getting actually 5,000. If even though it falls, you are end up with a profit of 1,200 by the end of expiry, 200 or 1,200. So based on number of days to expiry, you are still be in profit. So nothing but this buying, you bought a buying and you are going to convert this into no loss strategy. At the same time, you are going to get a benefit of increasing your profits. Okay, So let us see how the same thing can be done as a seller. Okay, as a seller, I sold this 40,000 call at 300. Okay, so what is the current price of 40,000 call? You can see 158. So as a seller, I'm in profit of 3,500. But there is an unlimited loss that can happen if Bank Nifty comes again, crosses 40,000, or if it is coming towards 40,000. So what we are going to do, we are going to hedge with 40,100 call. Okay, one lot. You can see here also this converted into no loss strategy. Instead of 3,500, we are getting more profit. At the same time, even if it comes back, we won't be in loss. At least we'll be having some profit. It's nothing but again we converted into no loss strategy. So instead you are thinking that it may come back and go beyond 40,000. You can do reverse. Instead of 40,100, try 39,900. See, now if Bank Nifty doesn't comes towards 39, still be you will be in profit of around 2,900, around 3,000. But if it comes this and crosses beyond, you can still get more than that, 5,400. So it depends on the number of days to expiry and your entry. Okay, so actually even as a seller, as a buyer, if you are in profit, instead of exiting, if you do a hedge, then there are high chances that you are getting more profit. At the same time, you will be converting that whatever the strategy you are following into no loss strategy. Especially this kind of hedging can be helpful if you are doing straddles. Okay, so I'll show you an example. So we entered a straddle at 39,200 at 580, 39,000 put at 430. Okay, so currently you are in profit, for example 6,000. Now what you can do, you can buy a call, for example at break even, or you can take some of this premium and do a hedge. So I'm going to hedge with 39,900 and 38,500 put. So as you see, so currently instead of 6,000, if as you expected Bank Nifty ranges in between 39,200 and some buffer, whatever it is there, you will be end up with more profit like 13,000, 14,000, 15,000. Even if Bank Nifty goes beyond this, you won't be in any loss. Just that your 6,000 profit may comes down a bit because your view went wrong. At least you are ending up with a no loss. Okay. So this kind of strategy, this kind of hedging is very helpful if you are doing any hedging, that too if you are carrying overnight prices, overnight positions. So I know that many people first do the straddle along with buying it out of the money, is making an iron fly. Even if you have an iron fly, after some time, when Bank Nifty comes to that point where your straddle is taken, then exit those out of the money and keep coming until you make the strategy as no loss strategy. So once you got this no loss strategy, you will sit silently and just view what is happening and how this is going to behave. This is not just for index options, actually this can even you do in stock options. So basically you can buy any OTM or whatever you are doing. Once you are in profit, instead of hedging, instead of exiting, just do a hedge with a plus or minus 1, plus 2 or minus 2 hedging, and see how you can convert that particular entry profit into a no loss strategy, so that their chances of based on your view getting a profits are more. Okay, the same thing can be done in streak, where you can give the offsets and manage the same thing. Okay, so let me know if you want to know those kind of strategies in streak. We'll work on it and I'll come up with more strategies. Thanks guys, thanks for watching, stay tuned.